Good evening, everyone. A very warm welcome to our chief guest, Mr. Ravi Varanasi ji, President NSE, Speaker Mr. Nagendra Kumar, Chief Business Officer, NSE International Exchange, Kamlesh Shah, President ANMI, Alternate President ANMI, Mr. Nitesh Jaiswal, Meghna, and all our esteemed members who have joined today, this evening, to understand on the topic opportunities for Indian retail investors, NSE IFSC. This is ANMI's 62nd webinar, and this has always been our thrust area in terms of spreading knowledge and awareness and handholding members for any business opportunities that come up. Today's topic is very important because now you can actually buy your favorite FANG stocks, maybe a Facebook, Amazon, Apple, Netflix, Google, that's Alphabet, on your NSE IFSC terminal. So far, you could invest, of course, in through the mutual funds, which were DSP, Nippon, ICICI, etc., or ETFs also. But now you can directly, and always direct investing has its own charms. While we are allowed to buy stocks of our choice, we can also buy in fractional ownership, which makes this product even more interesting. Let us today understand the opening possibilities, options available to us as dealers, brokers, retail investors in this new innovative product that NSE has brought us. Let me welcome Mr. Kamlesh Shah, Alternate President ANMI, for his introductory remarks.
Thank you, Kamlesh, Shroff. Good evening to all of you. On behalf of ANMI, I extend warm welcome to Mr. Ravi Varanasi, Chief Business Officer of NSE, our chief guest of today's evening, and Mr. Nagendra Kumar, Chief Business Officer, NSE International Exchange, and Speaker of the event. Dignitaries on the panel, dear members, and guests who have joined us today on this 62nd Silver Jubilee knowledge series on NSE IFSC opportunities for retail investors. Friends, we have been waiting for this product for a long period of time. Till now, only derivatives were existing in the IFSC GIFT City, but here on we'll be able to do real investment. And possibly we'll get 50 top stocks of US and other countries to be traded on this particular platform. And it will give us a lot of opportunity for adding our exposure to the international market in a very simple way. Following the footstep of developed nation, our Prime Minister, Mr. Modi, took initiative to build a city with all the facilities and safe and peaceful environment. The goal is to create a healthy habitat that ensures growth and development in various sectors of the finance and technology. Today, GIFT City serves purpose of global financial and technical hub to build globally recognized integrated city with modern facilities and focused to provide world-class financial services to the investors. In the year 2017, NSE International Exchange, a wholly owned subsidiary of NSE, had started its operation in GIFT City, providing world-class global trading platform, offering easy access to the foreign investors, multiple products, lower trading cost, long trading hours, and all transactions traded and settled in US dollar. NSE IFSC offers investor almost 18 hours of trading and operates market for a wide range of asset class, including index, single stock derivatives, commodity derivative, depository receipts, currency derivative, and debt securities. Since NSE IFSC is committed to transforming, improving, and growing Indian investment market by providing brokers and investors with the most efficient and cost-effective access to the global investment opportunities, and upcoming NSE IFSC US stock will open door to many opportunities to the retail Indian investors. This initiative is first of its kind at IFSC, where Indian retail investors will be able to transact on NSE IFSC platform under liberalized remittance scheme, better known as LRS. The limit prescribed by Reserve Bank of India, that is $250,000 per person per year. The business model offered by NSE IFSC will not only provide an additional investment opportunity to the Indian investor, but also make the entire process of investment easy and at low cost. NSE IFSC stock are innovative new product in the form of unsponsored depository receipt, offering Indian retail investors simple access to some of the world's largest companies. Launch of US stock in NSE IFSC will unlock significant value for the Indian retail investors, greatly reducing friction and removing some of the barriers to the entry for those who are looking to assess US equities. This will allow investors to experience international market at the doorstep. This will also expand portfolio base of the investors. This innovative structure offered by NSE IFSC is also expected to appeal to the investors who wants to invest in US listed shares, but don't want inconvenience of complex account opening forms and higher cost. The proposed framework will make US stock affordable to Indian retail investors. SGX Nifty, which is likely to be available at GIFT City around April or May of next year, will open further opportunities for the investors. Let us understand more on the global market and the US investment opportunities from the management team of NSE. Thank you, and over to you, Kamlesh bhai.
Thanks, Kamlesh bhai, for getting the audience attention and explaining the relevance of our today's topic and how relevant this product would be for members going forward by outlining the main points and how GIFT City has come into presence. On behalf of ANMI, I welcome our chief guest, Mr. Ravi Varanasi ji, who is President NSE. Our chief guest doesn't require any introduction as he is a well-recognized figure and a well-known to all my fellow members present here. Mr. Ravi spearheads exchange initiatives in the areas of market structure policy and business development across all asset classes traded on the exchange. He also oversees capital raising platforms for main, SME, and startup boards, education and skilling, and financial inclusion. He earlier headed regulatory function of the exchange. Raviji represents the exchange in various committees, advisory groups of the regulator and Ministry of Finance. Mr. Ravi has been with the exchange since 1995 and has a wide-ranging experience in business development, regulatory, and operational roles. He is also on the board of various NSE group companies. We are honored to have him here as our chief guest this evening. Raviji, would you be able to give us some highlight about the product and address us all?
Thanks, Mr. Shroff, for kind words. Good evening, friends. It is good to see you all virtually, at least. I mean, we obviously are not able to meet most of you physically, but I think it's good to have this virtual meeting. And particularly when we are on the verge of launching an important product in International Financial Services Center. We are hoping that this product will be able to launch in the next 15 to 20 days. Almost entire product related issues have been sorted out. We have got the approval from the regulator. We are on the verge of launching. So just to give a background, Mr. Kamlesh Mehta, Mr. Kamlesh Shah has talked about IFSC and its origin and what it has been doing for the last couple of years. As Mr. Shah mentioned, we were set up in 2017. We have set up this NSE IFSC, and from that point onwards, we are offering mostly derivative products. You name almost all derivative products which are available onshore are also available offshore. like Nifty, Bank Nifty, IT product, single stocks, and multiple other products have been made available. We're seeing some amount of traction. Close to about 70 members have set up their shops in GIFT City and have taken membership. Some 40 of them are already operational. Remaining members are at various stages of taking things forward. While, as Mr. Shah correctly mentioned, so far the focus has been on derivatives because we didn't have a depository there. So the moment we have got the depository set up there, we looked for a product which is of appeal to our retail investors. That's where we've looked at this possible vehicle of DR program on US stocks. And this is perhaps the first of its kind anywhere in the world, where US DR, stocks are traded in the DR form in dollar terms outside US. So it's a unique product which we are able to build. The product details Nagendra will take you through. I just wanted to highlight a couple of things. As Mr. Shroff as well as Mr. Shah mentioned, Indian investors are using LRS route to reach out to US stocks and other international markets. While the product is available, the route is available, it is extremely expensive. For FX conversion, it is exceedingly expensive. And the stocks are held in omnibus with the international brokerage firm. So there is very little, there is a series of intermediaries who are taking the investors to international brokerage firm. And the stocks are held in omnibus with the international brokerage firm, where as long as things are fine, there's absolutely no problem. If something goes wrong, there is exceedingly difficult to really access the international markets to get your stock back. That's where we wanted to make the product as simple as possible. And it's almost like accessing, acquiring a domestic stock like a Reliance or a State Bank or a Infosys or whatever. So to that extent, we wanted to ensure that the DRs are held in each individual's name in the depository in GIFT City itself. So you will get the depository statement along with whatever domestic holdings you have. You also will get the DR statement from one of our depositories in GIFT City itself. So the safety aspect is critical. We have also addressed the cost aspect by ensuring that the FX conversion costs are kept as low as possible. So idea is bring a product which makes sense for retail investors. As Mr. Shroff has mentioned, we have looked at fractionalization. So there are a series of features which are unique to this product, personally, I believe it's an important product. It's an absolutely unique product and useful product for our retail investors who can access even with a few dollars, $3, $4, $5. You can possibly buy an Apple or an Amazon or Tesla or whatever you want. So we are trying to ensure that your ability to access and hold some of the international stocks and benefit from the price rise which is happening in some of these markets while you hold Indian stocks is what we are looking at. And as Mr. Shah mentioned, we are also on the verge of implementing the SGX Connect, and we are hoping that also would go live in the next 6 months period. So as we go forward, we will bring more and more innovative products there. But my request to all our members is come there to GIFT City as fast as possible. And as I said, we are going to be live in just about next 15 to 20 days period. Please set up your entity there, take a membership of the NSE IFSC, and make this product available to your investors. And I'm sure investors will love this, and you would be able to facilitate their access to international markets through your own company in GIFT City. That's about it. I let Nagendra take you through the details of the product. Thank you very much for calling us and giving us this opportunity to talk to our members. Thank you very much.
Appreciate it, Ravi ji. As you rightly said that, unique and innovative products is something that the exchange would love to bring in. And I'm sure members are going to lap this up. And the highlights of the products we're going to understand from Nagendra. But as you rightly said, the lower cost, holding it in your own demat account, getting a higher yield, participating in markets abroad, trying to get a little higher alpha for what you're holding your investments for. Let me now bring in board our Mr. Nagendra Kumar, Chief Business Officer, NSE IFSC. In his current role, he is responsible for commodities business development at NSE Building, business at the NSE IFSC, and one of the key architects of NSE IFSC SGX Connect model. In and is driving the entire initiative of NSE IFSC's venture into trading in global stocks, where Indian retail investors will be able to trade through the LRS framework. He has been with NSE since 1995 and has experience in almost all the functions of the exchange, ranging from operations, memberships, listing activities, setting up of clearinghouse, handling physical delivery of settlements, product development, etc. In his earlier assignments with the exchange, he was heading the business development function of all asset class and was instrumental for bringing in global HFT and algo firms to India. He was also associated with NSCCL, responsible for clearing and settlement of all asset classes traded and reported at the exchange, conceptualization and implementation of various clearing and settlement solutions. He is part of various regulatory committees and a part of time faculty in the leading business colleges. Let us now dive right into the topic. Mr. Nagendra Kumar ji, over to you.
Thank you, Shroff. Thanks for your kind introduction. Mr. Kamlesh, Shah and other ANMI dignitaries, really thankful to ANMI for giving us this opportunity on your 62nd Silver Jubilee series. So before I get into the discussion proper, for the benefit of people who are new to this concept of GIFT City and how it has transformed, I just wanted to spend a couple of minutes to give an insight of what GIFT City is all about. I mean, it's a special purpose economic zone, primarily conceptualized to focus on international business. And it is our Honorable Prime Minister's pet project. He had envisaged this and created this when he was the Chief Minister of Gujarat. And in the last 1 year, the way the things have grown, I mean, the way things have picked up, I mean, it's remarkable. We have a new regulator there, IFSCA, and the regulator regulates the businesses of capital markets, banking and insurance sectors. And they came into existence in October 2020. And in the last 1 year, the progress that they have made is remarkable. I mean, they have completely carved out an exclusive regulatory regime under the dynamic leadership of Sri Jati Srinivas. IFSCA has also come up with a lot of guidelines and notifications. And the best part is that the number of offices that have been set up in the IFSC zone have increased from 120 last year to 250 plus as we speak today. So it's more than doubled in the last 1 year. The reason for this development can be attributed to the chairman's vision, Mr. Jati Srinivas' vision, and his team's passion to build business. And there I would like to make a special mention of Mr. Manoj Kumar, the executive director of IFSC. He was earlier with SEBI. Most of you must be aware that there are 2 exchanges since 2017. Until date, the focus has been only on derivatives market. And for the first time, NSE has come out with this innovative product offering where Indian retail investors will be able to trade on global stocks. So to start with, we are focusing on US markets for three simple reasons. I mean, it is not that we don't want to expand to other markets, but we want to test the waters with a time-tested market. The 3 reasons due to which we are looking at US is, first, the US markets contribute to 15% of the global GDP. That's the primary reason. The second reason is if you look at the entire market cap, the US markets contribute to 56% of the total market capitalization of all the exchanges put together of the world. Then if you look at the millennials or the younger generation, today there are no stocks in the Indian market which they could relate to. I mean, we would have heard this from a lot of other industry experts also, right? I mean, and 25-year-old or a 30-year-old will not be able to relate himself with a Reliance or a Tanla Solutions or Loris Labs, right? But at the same time, if you have to talk about a Tesla or a Netflix or a Facebook, Google, I mean, there is a strong connect and a bonding. I mean, people definitely are able to understand and relate themselves to the US stocks. So the whole idea is that, we want to start with US stocks and gradually move on to other markets. So getting into the discussion proper, So what we did was that I have my colleagues Nitesh and Meghna who have joined as a backup in case there is a connectivity issue at my end. They will step in. See, we have been working on this product for the last 18 months. So what did we do? What we did was we tried to open account with a lot of existing platforms. There are a lot of platforms who offer trading in US stocks and global stocks. Plus, we also tried to use our connects in US and tried to get a feel of how trading through Robinhood is or Charles Schwab is, some of the online retail platforms. So there were a lot of good things that we have learned. But in terms of what we understood is that yes, there is an LRS route available for you to invest. You have $250,000 per year, and there are a lot of platforms. But what are the concerns or drawbacks which we were able to ascertain? The top 4 items which we found out was, one is the cost of transacting. When I say cost of transacting, when you're remitting money through LRS. So some of the banks, we have just picked up one bank. It is just a copy paste of what was available with one of the banks. If you're transferring anything less than $500, they were charging 500 rupees as a flat fee. So that's close to $7. And if you're transferring anything above $500, they were charging around 1,000 rupees. And the bid ask, when an investor is transferring money, there was an RBI rate and there was a 2% bid ask spread from the RBI rate. And there was one more thing which Ravi obviously mentioned, saying that, the custody was under US broking houses. And what we also did was that, we spoke to some of the smart engineering kids in some of the top institutes, and we figured out that, they will be in a position to build an app which can mimic what's happening in US markets, and by which investors can actually get a feel of buying and selling US stocks. So what in effect, what we wanted to say here is that when an Indian investor is trading through these platforms, there is absolutely no confirmation to the investor which is given saying that a stock has been traded in NYSE or a NASDAQ or through a market maker or through a dark pool, right? So the only confirmation that the investor gets is a confirmation on his mobile app saying he has bought so-and-so stocks. So taking into consideration the existing framework which is currently available, and based on the study that we have done, what we thought was, why don't we leverage on our existing exchange at IFSC, NSE IFSC, and come up with an innovative product wherein Indian retail investors will be able to trade on these products. So first thing, what we also did was, so when we were working on all these apps which were allowing you to trade on US markets, what we found out was one wow feature was the fractional trading. So we were able to buy Tesla for $20. We were able to buy Amazon for $5. So how do you bring in this concept, right? And the regulators at IFSCA are forward-looking. They're looking at innovative ideas. And when we went and told them that, we wanted to offer this fractional trading, they were more than happy, saying that, since the product is innovative and bringing in an added feature in terms of coming up with a fractional trading is absolutely not, they felt it should not be an issue. But internally, what we felt was, if we had to do this fractional trading, there are 2 ways by which we could do it. The first method was like how the US markets work. The broker sits with an inventory. So every time a client is trading, the broker is going to be on the sell side. Basically, the client is trading with the broker. And the broker will have a reorder level quantity. Suppose he has got 50 shares of Amazon and continuously people are buying. The moment it reaches 49 shares or 45 shares, he again goes and borrows stock from the US market, or he buys stock in the US market, and again, he keeps filling his inventory. So that way, what happens is the entire onus is built on the broker. The broker manages the entire matching, and the broker would be required to report it to the exchange. So here, what we thought was, if we bring in such a feature, it is only few brokers who are tech savvy will be able to offer this feature. to their end customers. So then what we did was we had this concept of depository receipt. So to give you an idea of what a depository receipt is, I mean, a receipt, it's like a warrant or like a derivative, and it is completely backed by an underlying share. There are two types of receipts. One is a sponsored receipt. One is an unsponsored receipt. Sponsored receipt is like our typical areas, what HDFC Bank has got, ICICI has got, and a lot of other companies, where the company is involved. The company deposits some shares with a custodian in India, and the custodian, again, with its counterpart in US, creates a depository receipt. So what it means is every receipt which is created in US is backed by an underlying share here. So that's a sponsored receipt. But what we said was, why don't we look at an unsponsored route? We took a legal opinion, and things were very clear without any reservations or barriers for us to launch unsponsored DRs. So the way the unsponsored DR would work is that if Amazon is trading at $3,500, so we will have Amazon shares in our depository account in US, against which we will create depository receipts. But how many Indian retail investors can buy one share of Amazon at $3,500? So for that, what we did is to bring in the fractionalization concept. We have fixed a ratio for each stock depending on its value. For Amazon, since it is $3,500, so we have put the ratio at 500. For every share of Amazon, we will create 500 DRs. So what it means is an investor sitting here, an investor coming to Kamlesh Shah's office can buy an Amazon DR for $7. So if it is Tesla, again, there is a ratio, right? If it's Facebook, again, there is a ratio. So what we said is, why do we have to prevent Indian investors from getting the same experience that they are used to through this unorganized platforms? So if we have to bring customers into the system, if we have to build this market, we have to continue to give them what they are used to. So that's how unsponsored DRs work. And to start with, we are looking at top 50 stocks. The bucket is S&P 500 bucket. So it is completely based on market capitalization. So we have looked at top 50 stocks, and we are looking at 5 ETFs based on the AUMs and the entire framework. So the way it would work is every order coming into the system will match at NSE IFSC. So not even a single order will cross our national frontier. It is within the country, which is all your orders will, if let's say Kamlesh Shah's client wants to buy 50 DRs of Tesla, Mr. Kamlesh Shah will collect adequate margins, 100% margins here. Since it is LRS, you cannot do a margin trading. So he will place an order, the order will get matched at NSE IFSC. The trading will happen in dollars, the margins will be in dollars, and the settlement will happen at NSE IFSC. So what it means is, if you have an existing NSDL account or a CDSL account, and if you're used to receive a monthly cash statement, in that cash statement, your client will see 50 shares of Tesla DRs credited. So in effect, what we are trying to tell you is the entire framework is governed by IFSCA. And NSE IFSC on its best effort basis will ensure that all mandatory corporate actions are handled so that investors get their due benefits. We have put some restrictions in terms of cash dividends, because beyond a certain amount is when we actually credit the investors. Otherwise, we credit to the Investor Protection Fund. And it is completely settled through the clearing corporation. So in case there is a settlement issue, the investors don't have to worry, because it is a complete replica of the model at NSE. So the entire settlement guarantee mechanism kicks in. So ease of access, the Now platform is available, APIs are available. So if any of you want to build your own mobile platforms or browser-based platforms, you can build through your own structure. Or NSE IFSC is also working with a fintech vendor. So very shortly, we will come up with a plug and play model. So in case you don't want to invest, so you want NSE IFSC to give you a platform. So it'll be a mobile app sort of a thing, which will be integrated with the payment gateway systems of the various banks, including the preferred bank of NSE IFSC, so that without you investing, you can use the platform to trade on NSE IFSC. And the entire liquidity to start with will be managed by global HFT players. We have tied up with some of the top HFT players who are based out of, who are very prominent in US. So they will give you the initial liquidity, and there should not be any concerns with respect to how the trading will happen, because there are some stringent obligations which have been imposed on these market makers to give the initial liquidity. Another interesting factor which I would like to mention is when we talk about the costs, we did mention that based on our experience and research, we figured out that the cost ranges anything between 500 to 1,000 plus rupees for every remittance that you're doing. So we have tied up with a preferred bank. So if you work with our preferred bank, you can be rest assured the cost will be as less as 100 rupees and to a maximum of 150 rupees. And even the bid ask, right? When you're doing the currency conversion, it will not exceed 50 paise and it will not be 2 rupees, which is currently being offered. And down the line, depending on the volumes that you do, the preferred bank will ensure that the rates for your fixed remittance will go down to 0 as well. So it is directly proportionate to the amount of volume that you will do. And to start with, we will be trading these US stocks in the unsponsored DR form during US hours. And once we complete a cycle, which is a half-yearly cycle, we intend to open quotes even during Indian hours, so that you will have quotes right even during non-US hours. To give you a pictorial representation of how the entire structuring will happen, so the underlying share will be deposited with our US custodian in US, based on which the issuer here will be one of the custodians and the prominent banks with whom we have tied up. They will create the DRs and they will credit the market maker's account with either NSDL or CDSL. So suppose the market maker buys 25 shares of Tesla, and if the Tesla's ratio is 1:10, the moment the shares are credited to NSE's account in DTCC, the issuer here will immediately credit the market maker's account with 2,500 DRs. So with the inventory available in his account, the market maker will not only make markets to start with, he will also be responsible for supplying the initial inventory to the investors. So this is again a simple flow as how the clearing and settlement will happen. So any investor who's buying stocks would need to transfer the funds. So there is one exclusive section on margins where I will mention what sort of margins are required. So it is a simple pictorial flow where the moment the funds come into the settlement bank and the DRs are at the depository, they will do a DVP3 settlement. On the clearing corporation front, as I mentioned earlier, all the trades will be guaranteed by the clearing corporation. So there is absolutely no concerns with respect to what would happen if there is a settlement failure. So we will go with the concept of an initial margin and exposure margin. It is again volatility based, but we have, based on our analysis, we have figured out that the minimum margin would be in the range of 15 to 18%. So we are capping it at 15% and we are having an exposure margin of 3%. The settlement cycle will be T+3. So the US markets work on T+2 because of the time zone differences. We want to do it on T+3. And till the settlement, we will have a daily mark to market. So that's how the Indian markets also work. Till you settle the equity shares, you will have M2M which kicks in. And the framework around corporate actions will get published. We are coming up with a detailed product disclosure document which will elucidate the complete product mechanics, the roles and responsibilities of the exchange, the market maker, and the bank, the custodian, the overseas custodian. What are all the risks the investor can potentially get exposed to? So the product disclosure document would essentially be like a Bible as far as this product is concerned. And we will also have an exclusive section on taxation over and above the corporate actions framework. And any shortages at the time of settlement will be financially closed. We are not going to conduct an auction because it's already T+3. So we don't want to do an auction and extend the settlement cycle. So here with respect to margins, and Mr. Shroff was asking me a question before the session began. So he was asking whether you can do an intraday trading, right? So based on the guidance that we have received, so intraday trading is definitely possible. I mean, there are absolutely no restrictions since the transactions are happening on NSE IFSC. You're not trading on the US exchanges. That is the first point. The second point, as part of the LRS guidelines, which have been issued by RBI, you cannot do margin trading. So what does that mean? So if I'm a client of Mr. Shroff and I want to trade, let's say, Google for $100, right? Mr. Shroff should ensure that $100 are blocked at his end before the order hits the exchange. So the transaction which I get into should be, the value of the transaction should be completely blocked. And there should not be a pending transaction which is going to get created post execution of my transaction. So in a margin transaction, what happens is that you pay only the margin amount, and at the time of settlement you bring in the remaining. So such a thing is not possible. If Tesla is $10, if I want to buy 10 DRs of Tesla, Mr. Shroff as a broker should ensure that the entire $100 is blocked before the transaction hits the exchange. But as far as the exchange is concerned, we will block 18% of the value from Mr. Shroff because that's based on volatility. But the brokers have to ensure that the entire value is blocked. So to put it in simple terms, if I buy Tesla at $10 at, let's say, 7:30 p.m. when the US markets open, and at 9:30 it goes to $12, I can sell it at $12. The $2 which I have made as a crystallized profit, that I cannot reuse till it gets credited to my settlement account. But the $10, like my initial investment, that I can reuse to buy Amazon or McDonald's or whatever stock that I want to buy. So in terms of corporate actions, we will have our own record date. The record date here will be different from the US markets because of the time zone differences. So what our proposal is, which we are presenting to the authorities, that any cash dividend which is less than 10 cents, we will not credit to the investor's account. We will keep it to in the investor's protection account for the simple reason. So based on the last 5 years data, what we have seen is not all US stocks declare cash dividends, right? And whoever has declared, I mean, they're all in cents. So if the entire dividend is going to be per share in a cent, and if I'm going to do a fractional trading, the money which is going to get paid out is high, it's negligible. So instead of taking the pain to transfer that money and incurring a cost, we said it makes a lot of economic sense to keep it in an investor protection fund for the benefit of the market. And if there is any stock dividend or if there is any stock split, the investors can be rest assured that appropriate credits will happen to their depository account. And on a best effort basis, we will ensure that if there are any non-cash entitlements, we'll do our best to handle that. And voluntary corporate actions, we will not be supporting at this point of time. So in terms of taxation, everybody knows that the IFSC zone is a tax-free zone. And as far as the US markets is concerned, that every owner of the DR is treated as a beneficial owner of the underlying share. So in the books of IRS, you are a beneficial owner. So since the transactions are happening at NSE IFSC, there is absolutely no capital gains when you're transferring or when you're trading on NSE IFSC, as far as the US markets are concerned. And the only scenario when a tax norm will kick in is when there is a cash dividend. So whenever there is a cash dividend which is being paid out, there is a withholding tax of 30%, which IRS will withhold, and the remaining 70% will get credited. So, but if you are a non-US person, there is a form called W8 pen, which we are mandating that every broker, it's mandatory, yeah? Every broker, as part of his client onboarding process, he collects this W8 pen and submits it to NSE. So by submitting the W8 pen, you are confirming to the IRS authorities that you are a non-US person. So by submitting this, what happens is your withholding tax becomes 25% and not 30%. Other than that, there is absolutely no tax as far as the US norms are concerned. But when you have to look at the Indian income tax rules, for both the long-term capital gains and the short-term capital gains apply, and whatever income you're getting for your DRs in IFSC, they are subject to tax as far as Indian income tax norms are concerned. So what we are suggesting is that though we have given you an indication of what the taxation norms are, we would best advise you to consult your tax consultant or an advisor for better clarity, so that there is no ambiguity. But we are 100% sure on what we have listed down here, and the same will also get captured as part of our product disclosure document. So in terms of client onboarding process, if Nagendra wants to trade US stocks through either of the Kamlesh G's present here, the first is the standard KYC process. There is absolutely no differential KYC which has been proposed. Your existing KYC is more than enough to onboard a client. You have to upload all the UCC files, and the W8 pen is mandatory. So that's of primary importance. And then the clients need to have a demat account with the depository. So we will shortly issue a guidance on the depository aspect. So we are waiting for the depository framework to be finalized for us to launch this product. And we are also not mandating the need for a bank account in IFSC as far as your client is concerned. So if Nagendra has got an account with ICICI, and if Kamlesh Ji has got his account with, let's say, Axis Bank or HDFC Bank in IFSC, so from my ICICI account, I can remit funds through the LRS route to Kamlesh Ji's account, who's going to be my broker to carry out the transactions. So there is absolutely no need to have a offshore dollar-based account. You can continue to use your existing account, and all the settlement of funds for clients will be managed by the clearing corporation through the broker's account. So the investing is very simple. You just need to have your trading account as far as the client is concerned with the broker, get your demat account registered, transfer the funds. Once the funds are cited by the broker, they can give credit to the client's trading account, and the client can start trading. So in terms of the existing model and NSE IFSC model, I mean, this is just to summarize, what we have already talked about, right? The icing on the cake, what we wanted to mention here is that the entire framework is governed by the regulator, right? So Kamlesh Shah will definitely resonate with what I'm saying. When any of the Indian brokers, such stops, I mean, we had lot of brokers in the last few months who went down, and the broker being in India, the exchanges being in India, the regulator being in India, we still have a lot of clients who are running from pillar to post to get back their margin deposits, which they are actually, deposited with the brokers. So if that is the case, we can just imagine the pain that the retail investors will go through if the connect, if you're working through an unregulated platform who's working with a US broker. They do mention that, everything is insured. But if you have, let us say, some $5,000 and or $1,000 of stocks, is it worth the effort to go to US to claim your proceeds? So the whole idea of coming up with this framework is that just the way we built NSE with a strong governance structure, we want to replicate the same structure so that the region grows. I mean, it's been 4 years since 2 exchanges have been surviving there. And this is the first time, we can say with a lot of humility that we are seeing interest from retail broking houses wanting to set up shops. So in this model, everything stays with NSE IFSC. Not even a single order goes out of the exchange. And the key benefits, Ravi mentioned the third bullet. It's the first time that the US stocks are being traded outside US jurisdiction in dollar terms. The concept of DRs are prominent. You have it in Brazil, Mexico, Australia, but they're all traded in local currencies. But this is the first time that we are trading in dollar terms. Norms for investor protection is defined, fractional trading, settlement guarantee, and your clients are your clients. You're not going to route your orders through an XYZ broker or an ABC broker. So they will trade with you and your orders will hit NSE IFSC. For the simple reason, if your clients get to know that you're going to route your orders to another broker who's going to trade on NYSE or NASDAQ, down the line, your services will become insignificant. They don't need you, right? So to retain your clients and to ensure that the client stickiness persists, we feel that, this model will ensure that you grow, you expand, and in the process, we build the entire GIFT City region. And in terms of membership, it's absolutely no different from what it is in onshore. The only difference is that the amounts have been converted into dollar terms. If any of you are interested, we'll be more than happy to, individually connect with each one of you. The regulator is forward-looking. You can be rest assured that the membership process will be seamless and your approvals can happen in no time, subject to all documents being in proper order. And this is for a new membership. I think, Nitesh and Meghna, who are part of this call, we will share their numbers through the ANMI office. So any of you, if you're interested to understand more on this product or want to explore the possibility of setting up a shop, we will be more than happy. And before I close, thanks once again to Kamlesh ji and Mr. Shroff. And we wish, on behalf of NSE and my entire team, we wish each and every one here a happy and a prosperous Diwali. Thank you so much. Thank you, sir.
Thank you so much, Nagendra ji. It was an excellent, exhaustive slide that you gave us. And I think most of the stuff is reasonably clear. That probably can be seen in really not a large queue of questions. But just for the benefit of, taking this forward, if we have the time to kind of squeeze in some questions, which are, of course, have been answered at some point, but just thought that, as they have come into me, I would like to take this up. So as I understand this, the settlement guarantee advantage remains because up to 25 lakh cover for any kind of default on the part of the broker remains, because this is a wholly owned subsidiary of the exchange and is under the SEBI this thing. Is that correct to understand?
So the settlement guarantee is different from the investor protection, right? The settlement guarantee is purely from a settlement. That's a temporary shortfalls, whatever happens. The investor protection norms are different. We are coming up with an exclusive framework and we will publish it soon. And conceptually, it will mirror what's happening at NSE onshore. Okay. On a best effort basis, we want, so that, from an investor's point of view and from the broker's point of view, there should not be any significant difference when they're looking at NSE IFSC as an exchange.
Okay. So yeah, so you will be coming out with the guidelines.
Yes.
Okay. Another point that came up was, so this trading hours would be from 7 p.m. because we're going to be with the US market timings up to 1:30 a.m. Correct? Or is there correct, right? And no derivatives, intraday trading is allowed, but there are no derivatives on this at this point in time.
As we speak, no. But nothing stops us from launching. I mean, the current guidelines allow us to launch derivatives of any global stocks. And another point for the benefit of all the members and investors is that we are starting with 50 stocks and 5 ETFs. And we have got an approval from the regulator in a sandbox environment. So what does the sandbox mean? So since it is first of its kind, the regulator wanted us to test the waters. So once the regulator is given that comfort in terms of how the product works, from a trading, clearing and settlement, corporate action processing, because there are various entities which are involved, because we have a US broker, a US market maker, we have a US overseas custodian, we have a local bank, we have a local custodian, we have an issuer, we have a depository. So there are mammoth organizations who have come together to create this innovative structure. So once the regulator gets this comfort, we will be out of sandbox. So are there any restrictions? They have put restrictions in terms of number of clients, but we have got assurances from the regulator that once we hit the limit will be expanded. The reason, another interesting reason why the sandbox is essential is that if there is any policy related aspect which we have not factored in, or if we have not envisaged, and if it's going to hit us down the line, the sandbox framework will give us that flexibility to go back to the regulator and seek an appropriate dispensation. So it is basically like a testing phase, but everything is live, right? We're going to pay the market maker. I mean, we're going to have a transaction structure. There is going to be credit secured depository accounts. So everything will be live. But as far as the framework is concerned, from in the eyes of the regulator, they're going to closely monitor. And once we give them the adequate comfort, be it 3 months, 6 months, or whenever we hit the limit, we will be out of the framework.
Excellent. Are minors allowed to invest in this?
Sorry?
Because can minor invest in this? The LRS scheme does allow minors to invest up to the $2,500. But are minors allowed to open account for trading, investing on this? To the Guardian, of course.
No, I don't have an answer, Mr. Shroff. I think, it's because I want to look at the LRS framework and the IFSC framework before we confirm, but we'll definitely come back to you. That's a very good question.
Are PMS funds allowed to invest in this particular product?
Yes. So we have been approached by a couple of large funds who are currently taking an exposure through fund of fund route or whatever route. And we've recently come to know that one of the large banks has invested more than $60 million in one of the US stocks. So we are trying to work with a couple of large funds to see how we can, route their liquidity through our platform.
You mentioned that the shortages being closed off, so basically cash settled. So the rate that you would probably take is the similar previous day closing. Oh,
So yeah, so that's an interesting question. In India, if you look at it, it's the highest trading price or 20% more, right? So what we did was that we looked at our risk-free rate and 20% in India vis-a-vis the US risk-free rate, and we have extrapolated, and it will be close to 4.5% or 5%. So that's the max at which we will close out.
So 4.5% is the maximum markup.
Yeah, 4.5 or 5%.
Okay, based on the previous valuation rate that comes in.
Yes.
Okay, Kamlesh. Okay, I thought the conversion rate. Generally, the price that you would give, you'll give some closing price or something. So, what is the dollar conversion rate? You would most of the time it's not that fluctuating, so it shouldn't be an issue. But generally, what rate do you? Where do you intend to pick up that rate from? And
see, it's the services offered by the bank, Mr. Shroff. So every bank will have their rate card, right, at any point of time. So there are normal banks and there is my preferred bank, right? So if you work through our preferred bank, whatever is the rate card, plus or minus 50 paise max is what you have to spend vis-a-vis the 2% which they normally charge for others. And my preferred bank will also ensure that when you're remitting money, the cost will not exceed 150 rupees. The range is from 50 to 150. I mean, so depending on how much business, because it's basically a volume game, right? So there is a cost of the infra, the systems. So depending on the nature of the business and the number of clients you want to onboard, the banks will be in a better position to give you better rates.
And the liquidity, as you rightly said, you've involved the HFT people overseas,
Yes.
and so it'll be like a 1 rupee
Yes.
difference or a 50 paisa to a 2 rupee difference in
1
which
cent, 1 cent to 2 cent maximum.
Oh, excellent.
1 cent.
1
No,
cent.
because we're trading in dias. I mean, you cannot go less than a cent.
Right.
So
okay. Sounds good. Yeah. And
the APIs are ready. The test market is ready, right? If we are just waiting for, as Ravi was mentioning, we were supposed to go live October 1st. So, but we are waiting for the depository framework to get finalized in the entire zone. Once that is done, I think we are good to go, and it should happen in the next couple of weeks.
Okay. So broadly, by end of the year, say 1st December, we should be going live with 50 stocks.
So Ravi has never allowed me to use the word December. So he was always pushing for October. Now he's stuck to November. So
and we will start with a basket of roughly 50 stocks, right?
50 stocks, yes. I mean, the stocks have been identified, assuming that we go live in October. So we will do the exercise. See, it is like this. See, there are some listed companies involved. There are some overseas entities who are involved. So we wanted to make a proper announcement in terms of for all our strategic partners. The costing structure has to be announced. And all the documents that we are talking about, right? Let us say that you have an account in US. I'm just thinking aloud, right? And you have shares in US. You want to participate here. So what you can do is you can approach us, convert the shares into DRs, and sell it here. So there are conversion forms, there are redemption forms, there is a deep pool sort of a thing where you will get into an arrangement with the issuer. So, and we have created an exclusive website for this where at any point of time, all the filings done by the corporates with SEC, you will be able to see them. You will see the corporate action data. So I mean, it's a completely different exercise. And the best thing is everything is happening at NSE IFSC. I'm not telling you trade with me. I will introduce you to, someone else, right?
Of course, another point that just came up from the member side is that can't it be a membership without a charge? Of course, you have put in some deposit because there are members who are already there, existing members, and they could probably provide some liquidity. Works both ways. So is there some time period or some cooling period, maybe a couple of years, you won't charge anything? So what that you're thinking about?
No, see, let's. I mean, I'm taking the liberty to respond even if Mr. Ravi is there. So why don't we have a representation from ANMI in terms of what your proposal is? If it is not crossing the regulatory boundaries in the sense, right? There is a regulator and they have prescribed a structure. If it is the regulatory structure, then I have to approach the regulator and seek appropriate approvals. If it is within NSE, we will do our best to ensure that, we onboard new members.
Okay. So basically, it's from the perspective that you had a slide which said 15,000 for prop, 25,000 USD for.
That's the BMC deposit, which is the bare minimum prescribed by SEBI as well, right?
Correct. So that deposit, is part of the deposit is anyways part of the broker's capital.
Correct. But there is no exposure given on this. There is no exposure given on that.
Achha. On this, it is not given any exposure.
And since it is a cash product, for every transaction, you need to have the adequate transaction value before you get into the transaction, right? So
this is also, can this be with shares, securities and cash, or this is pure cash deposit?
So see, we are looking at, Indian stocks cannot be taken in, right? I mean, because the depositories are not linked. And we are not looking at any other stocks to start with because you will always have that liquidity risk. So your collateral should be highly liquid. So to start with, we are looking at cash and US Treasury. You can give BGs and FDs. I mean, if you have a good relation with any of the banks out there, you can always give BG and FDs.
Sir, here, sorry to interrupt, small question.
Yes, sir.
Please go.
Already registered and who are operating from the GIFT City, if they want to invest money, they can always invest money, correct? In the stocks.
Sorry, sir, say that again.
The brokers who are operating from GIFT City can always buy shares.
Yes.
Keep that as a deposit, and that deposit can be placed with you also.
Yes, sir. So, for example, your firm, if your company is already a member, I mean, now you can just onboard your clients and start trading. And whatever existing deposits that you have, that is more than sufficient from a BMC perspective. And it is only for US stocks. When you're buying and selling, the entire buy value should be there as margins as far as NSE is concerned.
No, here, sir, what clarification I wanted is that, I have X amount of deposit, which is more than the BMC deposits. So do I have to have it separate allocation for this?
No, sir. No, sir. The existing structure is more than sufficient.
Will take care of it.
Yes, sir.
These deposits would be allowed to be utilized for the margin purpose?
So the BMC will not be used. Anything over and above the BMC, which is your free collateral, that can be used, sir.
Right.
When members who are already there in IFSC, GIFT City, you already have a T and you're already trading there, you just don't have to do anything. You just have to ensure that your clients are bringing sufficient money to take through the LRS to take care of the acquisition value of acquisition, and that's it. You don't have to do anything. New members who have not been in GIFT City have to set up an entity there and then bring this deposit, whatever 15,000, 25,000, whatever has been mentioned.
Right, sir. And for the members who are operating from GIFT City, this would be tax advantage, because there will be no tax on that profit. In case if you have bought some shares, say for example you bought 1,000 Reliance or whatever it is, or Amazon or whatever it is, whichever is traded in the exchange platform, and then he makes some gain out of it. So that would be again treated under the tax exemption. So that will be an added advantage for the members to deal in equity under the ISFC code.
So, but when you're bringing the money out, let's say you've invested $1,000 in Tesla, and when you sell after, let's say, X period, it becomes $3,000. So the $2,000, when you bring it to India, right, that will be subject to tax.
No, sir,
right?
I'm not talking about client. I'm talking about the members. If it is prop desk, if he has bought in the prop desk account in his own broker's account, then that would be tax free, because here whatever profit from the derivative trades are also tax free. So equity should also be tax free.
Correct, sir.
Thank you. So that will provide a lot of liquidity to the system. Thank you.
Thank you, sir.
I think we could close this session, Kamlesh bhai. Do we have any more questions or? And before we do that, if members need to reach out to y'all, if you can flash, or you could probably send it to ANMI, the email ID and any dedicated telephone number for the same. It will be easier for us to, send it to them.
Done, sir. Done, Mr. Shroff.
Yeah. So, I, Kamlesh Shroff, on behalf of ANMI, would like to thank all for attending our 60-second webinar on the NSE IFSC opportunities for Indian retail investors. We hope you enjoyed it and hope you will take the advantage of investing in global equities, which is the new trend and which has attracted a lot Indian investors. You can access today's webinar on ANMI's YouTube channel and feel free to connect to us in case if anyone's interested. We will be happy to share numbers of the officials who can take your queries and take it forward. Wishing all of you a happy Diwali and a prosperous 2070th Samvat with that. Thank you. Thank you, Ravi ji. Thank you, Nagendra ji.
Thank you, team. Happy Diwali to all of you.
Thank you very much. It was really very good presentation and very useful and knowledgeable. Thank you so very much.
Thank you.
Thank you, Kamlesh ji. Thank you, Mr. Shroff.
Thank you, everyone.
Thank you, Mr. Raghvendra. Thanks, Ravi. Thanks, guys.
Thank you.
Thank you.